My name is Alphinity. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Chris Willcocks with me, one of the portfolio managers in our global team, and he's just done a trip to Japan. So today we will be talking about some of those highlights and what it's meant for the portfolio. So Chris, as a starting point, tell us, where did you go and who did you see?
Yes, I spent slightly over a week in Japan seeing a bunch of different companies in the consumer, industrial, property, technology sectors. I visited Tokyo, Kyoto, Osaka and Nagoya.
Okay.
So had a really good trip meeting with companies in their offices. We're also, luckily enough, invited to see the manufacturing of operations of Makita and the R&D Innovation Centre for Toyota.
Fantastic, very interesting. So just looking at your feedback, you mentioned that from an overall perspective, it's really hard to overstate the differences that's been happening in Japan over the last 24 months. Can you expand on that and also include a few of your high-level thoughts coming back from there?
Sure, yeah. I mean, when I reflect back on all the meetings and what I heard, I think there's lots of little changes that are occurring in Japan. But at a very high level, I think there's three big changes that are all starting to positively compound and create quite a tailwind for the corporate sector there. The first is deflation. Yeah. You need to remember that Japan had deflation pretty much for 40 years, and it's hard not to sort of overstate how much of an impact that could have. Yeah. That's a generation of CEOs, executives and consumers that have never seen inflation. Yes. And that drives very pervasive behaviour and decision making. You're now 3 years into inflation in Japan. And I'll give you an example of what we heard. We met with the rail companies that manage the Shinkansen network in Japan. One of the rail companies is lifting prices for the first time in their history. 40 years that they haven't put a price hike through. So that's having a real impact. You're seeing wages increase. Most of the companies that we met with talked about wages going up 5 to 10%, and that's on wage increases from last year. Yeah. Consumer confidence is starting to improve. Property prices are rising. We heard about areas of Tokyo, property prices have increased 40% in 6 months. The stock market has surpassed its 1989 high. Yes. You're now at all-time highs again. And you're seeing this start to impact consumers. Ultimately, inflation might catch up and the consumer might respond negatively. But today, as we sit here and now, the consumer's in really good health, and that's sort of flowing through to corporate earnings. If you add to that corporate governance, the Tokyo Stock Exchange has spent a decade increasingly applying pressure to corporates to improve governance. You're starting to see the visible impacts of that. We met with a number of companies that have done buybacks for the first time. It sounds small and silly, but a number of companies doing investor days for the first time. Okay. We met with companies that are divesting non-core assets. So we met with a consumer company that sold a marriage counselling business they owned. Okay. You can argue whether or not they should have owned it in the first place, yes. But the fact is they've sold it, and that's improving returns ultimately to us as investors. So that's the second major change that you're seeing, and that's not new, but it's starting to compound. And lastly, you have a very popular Prime Minister, Prime Minister Takaichi, and she has been given a mandate to roll out her agenda, and that's very corporate friendly. Yeah. So there's three major changes that are really tailwinds for the corporate sector there today.
Wow, that definitely sounds exciting and quite broad. So let's drill down to what this has meant for your portfolio. Can you flag a company that you've added that you're really excited about?
Yeah, sure. And a good example is a company called Fast Retailing. Perhaps not a lot of people have heard of Fast Retailing, but everyone will have heard of Uniqlo.
Yes.
Fast Retailing owned the Uniqlo retail business.
Okay.
And this is a fascinating business. It's founder-led and owned. The founder still owns a significant stake in the business. He's currently the CEO and chair. They have a very nice balance between male and female, between kids and adults. They're casual without carrying a lot of fashion risk. One of the most unique things about the business, I think, is they carry about 4,000 SKUs. And that includes 10 different coloured t-shirts of the same t-shirt.
Yes.
By comparison, Zara carries about 20,000 SKUs.
Okay.
And so it allows them to really manage inventory closely and generate better returns and margins. So they've just reported second quarter earnings. Their product and offering is really resonating with consumers. The top line's growing at about 15% year over year. This has been driven by strong growth in their core Japan market, but also strong rollout of stores in US and Europe that are generating really good returns, and an improving offering in China. We think the market looking forward is underestimating the growth of the business. We think they can continue to roll out stores in the US and Europe. We think it's quite early there. And we think that ultimately analysts are being too conservative in their forecasts for the business. So that's a stock that we've added to the portfolio recently.
Fantastic. It sounds really great. So thank you, Chris. And for more information from Chris and the team, please visit us on alphinity.com.au and have a look at our insights section. Thank you.
Thank you.